fund manager Arnab Banerjee, who's the co-founder and chairman of Collabrium Capital, has some long-short strategies on India. Dr. Banerjee, thanks very much for taking the time out. First up, what's your top conviction idea, stock idea, and why?
My top conviction idea at the moment is Reliance Capital. And why? Well, it's a theme of probably all our holdings, which is reform and the future of the Indian economy. We're long-term believers in India's financial services. For India to grow, it needs to mobilize its savings. It has a high savings rate, 30 to 40% of GDP, and this has to be mobilized into infrastructure. And in India, the penetration of asset management, of insurance, is comparatively low in the context of Asia as a whole. Now, if I look at Reliance Capital, it's a full-service investment house that does insurance and also asset management and credit provision. And I think that, and consumer finance, I think the issue here is that with 1/3 of its revenues coming from insurance and some reforms expected in the insurance sector, which we think might be flagged in this budget, they will do well. And they're trading at a price to book of 0.9 times, which is at the lower end of their historic valuation, so they've got support there. And we also think the Indian economy is near the bottom of its range, so a growth range. It may just be edging up. Not aggressively, I'm afraid, but edging up. So combining our long-term bull position on the sector with the valuation of this stock and its exposure to insurance, we think this is a good buy. It's our top conviction stock in the market.
Dr. Banerjee, from the oil and gas, which stock stories do you like? I mean, considering that the government is up in arms with regards to reforms in that space.
Well, the government reforms are to do with taking away the subsidy on diesel. Petrol is already deregulated, and the oil traders have been raising prices, and prices will normalize, I believe, by the end of next year. Now, we like ONG, we think that the oil company is going to benefit from this. And if there's further reform in gas, it's just upside. And again, the valuations are quite compelling to us.
You spoke about Reliance Capital. Where else is your preference in the financial space? PSU banks are seeming attractive purely from a value perspective, private banks or NBFCs?
Well, I think I said earlier that we are great fans of financial easing and deregulation, deregulation and the involvement of foreigners in the insurance sector. But in banks, valuation drives a lot of what we think. If the Indian economy is beginning to bottom and, well, beginning to take off and infrastructure revive, then we're very keen on the state banks. Punjab National Bank, for instance, is right at the bottom end of its valuation. And the problem with a lot of the state banks is that they're held back by the perception that their past involvement and current involvement in infrastructure saddles them with lots of non-performing loans. We think this is overdone, and the discount that they're running is excessive. And in the case of Punjab National Bank, it's right at the bottom end of its valuation, 0.9 or 1 times price to book. In fact, historically, 1 times has been the floor, and it's just below that. And there's evidence that non-performing debts are less than expected. So if the negative view is excessive, then we would expect a bounce out of that, and we expect that the state banks offer better value in this respect.
Where do you expect to see value, I mean, sector or stock-wise, post the budget?
I think the value is going to be in those areas that are most sensitive to reform. So we're talking about reduction of subsidies in the oil sector. We've mentioned that. I mentioned banks and insurance, and I expect reform there to feed into that. So I think those areas will be sensitive. Now, there has been a real lag in infrastructure commitment, and whether we're looking at HDFC or Larsen & Toubro or others, these these areas of the market, of the economy, have not performed as well as they might. And I would hope for a surprise on infrastructure, because that is actually where everything is leading. But I stick with my view that oil and gas and the financial sectors are the ones that will do the running.
Purely on the index, Dr. Banerjee, would you be short or long on the Nifty, given the weakness that we are seeing in the market in the run-up really to the budget? And what would be your position on just the index post the budget?
That's a very good question. Historically, the Indian market has 6 out of 10 times underperformed after the budget. So it makes sense to be long ahead and short afterwards. However, it doesn't do this if it has had a weak spell before. And indeed, we're in a weak spot in the market at the moment. The market recently has been lackluster and selling off. And in those circumstances, I think it would be dangerous to be short of the market ahead of the budget. In fact, our position is the right stance is to be long ahead of the budget, and this is going to be the exception. This is the one that probably, on balance, will bounce. We're long-term investors, so it doesn't bother us too much because we think that reform is there and growth will pick up. But your question about whether it's best to be long or short ahead, I think it would be dangerous to be short of the market ahead of the budget.
What, to your mind, is the biggest risk for the Indian market, and what return expectations do you have in lieu of that?
I think the biggest risk to the Indian market would be disappointment on reform. If it's mealy-mouthed, limited, I think we'll have greater capital flight. The other associated risk, well, it's not reform-linked, but it's always at the front of people's minds, is, in fact, if there is a spike in global energy prices, and this is, in some sense, associated with a slowdown in the global economy. But India is internal, so I think that very heavily driven by its domestic market. So the thing that worries me most is failure on reform.
Dr. Banerjee, really appreciate you joining us this afternoon with your perspective on the market. Thanks very much for taking out the time.